away for a week, but when I hear you speak, I try to hold on. Cut into the stone, tattoo on my bones that your weakness. When you're not around me, I'm slowly drifting.
All right.
I try to reach out for you. Hold on together, our hearts are still tethered.
All right. It's been a while. I've kind of forgotten how to do in-person events. So, yeah, welcome everyone. It has been, has anyone been at an event in the last few months? Yeah, I know you have, Billy, but yeah, anyway, welcome back is all I'd like to say. I'm Ian Gardner. I know a lot of you, so I am delighted to be back. Now, before we start, I'd like to acknowledge the traditional owners of the land where we're meeting. So it's the Gadigal people of the Eora Nation, and we pay respect to their elders, past, present, and emerging. All right, so as I say, we're delighted to get us all together again. This is kind of the capacity that we're allowed at the venue. So, but we are going live to the internet, which I am used to, having done it for most of the year. So welcome to everyone who's joining us online. I'm not even sure which camera to looking at, probably that one. And making sure that we've got all of our multimedia covered. We are going to record this for the Open the Pod Bay Doors podcast, so this will be going out shortly, so we've got it all covered. Look, it's been a huge year for all of us. I mean, founders by their nature are resilient and tenacious, and I think this year has certainly tested all of us to do with that. And we'll hear from Kate shortly. She can certainly speak to resilience and tenacity. I think having anyone that survived the Melbourne lockdown, I think gets a tick in the box with that. So in some ways, look, I guess it's no surprise that the startup sector has come out of this relatively unscathed. I mean, there's been some bruises and knocks in the way, but there's not been the sort of widespread death and destruction that we could have been worried about. Personally, I was pretty terrified back in March. Like Innovation Bay was we're a community group, but we ran events. That was what we relied on, and suddenly we couldn't do events. And I'm also a partner at Gelix Ventures, and so we got an investment company that couldn't do investments. So the world looked pretty bleak. So fast forward to now, it's definitely feeling a lot better. It's only 8 months ago. It does feel a little bit longer than that, but there is a palpable positivity which we have around. And I think as a country, we've handled this pandemic better than just about everyone. I mean, the case numbers are extremely low. Hat tip to New Zealand as well for doing that. It would be nice if we could be equivalently competent at handling climate change and transitioning from fossil fuel, but I guess that doesn't affect the next election cycle, so who knows. All right, let me give a few thank yous before we start. In fact, let me tell you a little bit about Innovation Bay. For those that don't know, we are a long-running community group. We've been going since 2003 when I moved from Scotland. We support founders. We talk about from idea to IPO and beyond. And that's what we're going to be talking about today. So we thought that was pretty fitting for us. And we do it with events and content and bringing people together. Thank you to all of our speakers this year. I do want to give a few thank yous. There's been almost 200 speakers that we've had across the Wednesday events, the news podcast, and the podcast itself. So we may not have been doing physical events like this, but 200 speakers is a lot, and it takes a lot of effort to get those people to talk, and we have to talk to them, which we loved. So I wanted to thank all of them. Also wanted to thank the Innovation Bay team who've stepped up and helped us personally crush the COVID crisis. We love bringing people together. At the core, we are a community builder, and that's what we've done. So we now have a group, a couple of them are here, Summit Club, which is a group for Series A and beyond founders. There's 35 members in that, and the whole ethos of that group is to bring people together and help them solve tough problems. So not just in business, but in their personal life and their families. Because, the 3 pillars of your life, if one of them's shorter, if one of them's not right, it wobbles. So you've got to get all 3 in balance, and that's what we try and do with that group. We've also just launched Horizon, which is a group for the angel investment community, and also Aurora, which is a venture capital community. And then next year we are going to launch Canopy, which is going to be for the earlier stage startups, but we probably won't get to that until later in the year. So quick call out to the amazing team. So Faden, who's my co-founder, Claire, who's here at the back as our event manager. Thank you, Claire. Sam, who's in Melbourne, CJ, who's in Byron, and Alison, who is virtual. Shan's no longer with us, but we thank her as well. She's been terrific for us, and we wish her the best. And we've also just had Anna Tyndale, who's just joined us. So I think we're almost there. I want to thank our sponsors. Oh, after that, in fact, let me thank the first sponsors. So Josh, do you want to come up and give a little thank you from us, or from you, I suppose?
Thanks, Ian, and good morning, everyone. So for those that don't know me, my name's Josh Collard, and I'm part of the Listings Business Development Group here at the Exchange. Our role is to work with founders, funders and advisors to promote ASX as a listing and capital raising venue. It gives me great pleasure to welcome you all here today to what is Innovation Bay's first in-person event since restrictions have eased, as Ian has said. Although the room's pretty sparsely populated, we are actually at capacity, which is great, and my understanding is we have well over 100 people joining via the live stream as well, so welcome. We're all looking forward to hearing the story of Adore Beauty, from an idea 20 years ago to the successful IPO at the end of October this year. At the time of its listing, Adore Beauty held the mantle as our largest listing year to date, raising $270 million on a valuation of $635 million. It is also great to see a business that has a board and management team where women are actually in the majority. The Victorian border was still closed when Kate listed her company, which prevented an in-person listing event. So today is the first day that Kate has been able to set foot here at the Exchange. So a very warm welcome to you, Kate. The tech sector on ASX is something that we here at the Exchange have been working very hard over many years to grow. We've listed over 100 tech companies in the past 5 years, raising just shy of $4 billion in IPO proceeds for those businesses. Over the same time period, our listed tech companies have raised over $21 billion in follow-on funding, which can be done in as little as 48 hours as a listed entity. Daily turnover of equities in technology has gone from about $100 million a day to $800 million a day in the same time period. Tech is now the second largest sector on ASX by number of companies, with 260 listed entities and a combined market cap of just under $180 billion. 30 of those companies have a market cap of more than $1 billion. And last week we had our largest tech IPO ever by capital raised, which was Nuix, who raised just shy of $1 billion. The build-up of tech listings over the past 5 years has given us the critical mass to launch a dedicated index here on ASX in February, right at the top of the market, unbeknownst to us, but it was called the S&P ASX All Technology Index. That index now has 58 tech companies included, is up over 130% from the March lows, and has more or less tracked the performance of the NASDAQ composite index and vastly outperformed the ASX 200 over the same time period. To the founders in the room or online considering raising growth capital, or the funders that are thinking about liquidity options, or those that happen to advise growth companies, we here in the listings business are always willing to have a chat, learn about your business and provide guidance and insights as you explore your financing options. Thank you for coming today, and we look forward to celebrating many more success stories like the one we're about to hear. Cheers.
Awesome. All right, thank you, Josh. All right, we're about to get started, but before we do, I do want to give a thank you to our sponsors. I think we both pressed the button. Thank you. So thank you. We couldn't do Innovation Bay without our sponsors, so AWS, Firemark, IAG Firemark Ventures, that is, KPMG's High Growth Ventures, and Macquarie Bank. So thank you to all of them. Let's give them some love and use their services. All right, should we, sorry, you've been sitting here, while I've been banging on, so we should probably have a chat.
Let's.
Welcome. How is it being out of Melbourne?
It's weird. Yeah, it's, look, Sydney's a lot more normal, I think, than Melbourne is. I was sort of fairly shocked that, come here and there's nobody's wearing masks and people are shaking hands and things. It's cool.
Yeah,
it's good.
But your numbers are better than ours.
I know.
Yeah, you're smashing it.
That's it.
And we still get little problems. Actually, just before we do start, we are taking questions, so we're using Slido. Yeah, that's on screen there. So if you want to ask a question, then pop it in. All right, let's talk about Adore Beauty.
Yeah.
Because we talked in Melbourne 4.5 years ago. I looked it up.
So how long it was?
That's 4.5 years
Yeah,
ago.
right.
And I remember I looked at my notes from that, and your business was valued at 30 million then. Mm-hmm. It's now around about 600, so it's been pretty good progress since then.
Pretty good.
So let me just run some numbers. So 220 brands, 15,000 products, $100 million a year in revenue, and as I said, a market cap of around 600 million. Yeah, look, it's a long way from 4.5 years ago, but even longer away from growing up in Launceston and being in on the cosmetics counter as a part-time uni student. So, I mean, do you want to give us an insight into that journey from childhood to cosmetics counter to tech corporate titan?
Just in 2 minutes or less.
You got 90 seconds.
Yeah, no, sure. So look, yeah, not from an entrepreneurial family background at all. So no one in my family had ever started a business before. It wasn't something that I ever imagined for myself. I was just going to go to school and study really hard and get into uni and get a good job, and that was what I was going to do. And got into arts law and did that for a whole week before realising that I absolutely didn't want to spend the next 5 years studying that, and certainly not go and have to be a lawyer after that. So just ended up sort of floating around, and while I was paying my way through uni, so I was working on, this was in Melbourne by this stage, working on the clearance counter. So we had a very fetching sort of white poofy sleeve dress with like a red belt and matching red shoes. It was gross. And but
have you got photos of that?
Probably.
Yeah, right.
Yeah, they're not here. But loved it. Like I absolutely loved working on the counters, and I'd always been a little bit of a beauty junkie. Yeah. And I guess the thing that I loved about it, having just been a massive dork all through high school, was that that was a way to to feel confident, or to feel like you could be a different person for that day if you choose, by wearing a different lipstick or doing your hair a different way, and that was always what I loved about it. But I really noticed when I was working on that clearance counter that most of the customers that would come in would find were not loving that whole experience, and were having to sort of psych themselves up before going in, because they knew that there was going to be this very sort of high pressure sales process, and we all had our sales targets that we needed to hit. And the whole sort of shtick of the beauty industry was always, let's make women buy things by making them feel bad about themselves.
Right.
And I thought, well, that's, to me, that didn't match what my experience of the products was. And I thought, well, that doesn't make any sense if that's what the retail experience does. And that was in, we're talking like 1999. So this is like very, very, very early days. Yeah. Of online shopping, and I thought, oh, somebody really needs to do this for beauty, because I think a lot of people would prefer to shop that way, and all the Tasmanians would be able to kind of just buy whatever stuff they liked, rather than having to wait for someone to go to the mainland to pick up bits and pieces for them. And I kind of waited for sort of 6 months or so, meanwhile, like boring all of my friends by just going on about the idea of online shopping endlessly. And it was my boyfriend said to me, he said, look, are we going to keep talking about this, or are you going to do it? And it was not before that moment that I actually considered that I was going to start a business.
Wow, so that was the genesis.
That was how it started.
And there's some interesting early stories, like, because you didn't have much money, so you can touch on that if you want. But you also had to learn to code, because you couldn't find anyone else to do it for cheap enough. Is that kind of the punchline?
Well, yes. I mean, it all kind of comes from the lack of money situation, because I tried to work out, okay, what was the minimum amount of money that I would need to get sort of something up and running, and ended up borrowing $12,000 from my boyfriend's dad, who ran a motel. He was the only business person that I knew. So he taught me how to read a P&L and all of that, so it was great. And that was basically enough to get a website built and to buy a little bit of stock, but not really enough. Like, once I'd had the website built, it wasn't enough to like get it updated all the time. And of course, it's not like it is now, where there's just Shopify or whatever off the shelf. So it's all just like click and drag. It's like, oh no, things had to be like hard coded out of stone and Perl script. Like, it was it was just a different time. And so I thought, well, how am I going, like I need to put something new on my homepage. I need to like change the images around and put some different text on. I thought, oh, how am I going to do that? Like these, the developers cost like $180 an hour and I didn't have it. So I thought, well, I'll see if I can, how hard can it be? And, borrowed like HTML for Dummies out of the library at uni and just kind of figured it out and broke the site a bunch of times. And yes, I learned to code. My coding is not good. But
do you still like that? I mean, do you go into the office and, well, maybe not so much
Oh, they
now,
wouldn't let me touch it, no.
Right.
Oh, no.
But are you across the tech team and what they're doing?
So I think it was useful to have that understanding of how everything worked, because then I knew if I went to a developer or someone like that, I kind of knew whether they were pulling my leg about how much something would cost or how long it would take. And so that's been handy, but obviously, we have a CTO now and we have a whole team that's their job, and so I don't have to worry about it so much.
And it's a nice story with James, who was your boyfriend at the time.
Yeah.
Now your husband.
We're not married, actually.
Oh, you're not married? Oh, sorry. Well, your life
after
partner.
20 years, it doesn't count.
Yeah. And you've got some children too. I think that's
Yes.
more committing than marriage.
Yeah.
And you're in business together.
Yeah.
And so, how's that journey been just personally?
Look, I don't know any different. So people sort of say to me, oh my God, isn't that weird, like working with your partner? I'm like, I don't know, is it? Like we get on great. We actually have a very complementary skill set. And I think there's something about, because, a startup is kind of like a baby, really. And, requires as much attention and, and demands enough of your focus. And so it's actually kind of useful, having that kind of shared interest, because otherwise I think if it was someone else that didn't have any involvement with it, then I imagine they would get bored of me talking about it all the time. But as it is, it's like, oh no, well that's what we do. We have 3 babies.
And it does seem to work. You are in good company, like Canva. Those founders are a couple. Envato, another Melbourne store reduce that wasn't a huge company, but they were a husband and wife team, and I'm doing it too. So I've got it.
Oh, there's lots.
Yeah. No, and it does work.
Yeah.
It can be challenging sometimes.
Oh, sure. Work does take over your whole life a little bit, but I don't know. That's startup world anyway, right?
All right, Lou, let's dig into some of the topics I got in the sheet here. So, like funding. So that's been we talked about the title here, from idea to IPO. So IPO is kind of the end point. But you started with $12,000. What were when there were any sort of funding milestones between then and an IPO that you want to touch on?
No, so we were self-funded so the $12,000 was a loan, which we paid back inside of the first 2 years, and possibly should have gone for equity.
Right. This is still early.
Sorry?
This is still early.
Well, but with a long view, that would have been good. Yeah, anyway. So that was still very early, yes. And look, self-funded for 14 years. And so it's just, the business model had to work and had to be able to generate cash to sort of support its own growth. So I guess, there's a lot of discipline, I think, that comes from bootstrapping for that long.
And did you think about funding or equity funding at that point? Or?
No.
Right.
I didn't actually really even know that was a thing, or that would be possible. I wouldn't have known the right people anyway. There was no, if you think about like early 2000s, there was none of the infrastructure that there is now. There's no sort of startup communities or things like this. There was nothing. Yeah,
because there was a gap, there was a period in there, I seem to remember this from the last conversation we had, but it was just really tough. And you were kind of wondering, why am I doing this? This is brutal.
Yeah.
I'm not getting paid. When was that?
So that was sort of 2009, 2010. So, right. Kind of like you've been doing it for 10 years. I think we were at like 3 million in revenue by this point. And we'd always been sort of growing steadily every year, but then the growth started to get more challenging because basically we couldn't sort of forward invest on the things that, that you'd need to do that. And it was very much just felt like I was kind of stuck, and maybe if I knew what I was doing, then if it was someone who'd known what they were doing, perhaps they would have known what to do next, or maybe this was just sort of as big as it was going to be, and if so, then did I still want to keep doing it? Because all of my friends had gone and, finished uni and had proper jobs and were, getting paid, and I was still
Yeah, and they're going
not
on nice
really.
holidays and driving nice cars.
Oh, yeah, and suits and working in the city, and I was just, in my lounge room, and so it was more, yes, how do I achieve that next stage of growth, or is it just like, should I call it? Should I actually just call it and chuck it in?
So what kept you going?
So I went and saw a business coach actually, and she said, look, I want you to do an exercise for me. I want you to sit down and write a letter to yourself from 10 years in the future. And which to me sounded kind of like a lame thing to do, but it's like I'd already paid her it was $500 an hour, which I thought was outrageous. And so I thought, all right, fine, well, I've paid the money, so I'll do it. And yeah, that was the thing that really just made me see what needed to be done, and that it didn't need to be somebody else, and that it that it should be me and James, and that we could do it. But I knew that it was like to make a lot of the changes that we would need to make. I knew that those things were going to cost money, and that to be able to raise that money, we'd have to prove that we could get the fast growth before we raised the money. But then, of course, you need the money to be able to get the fast growth. And so we actually just remortgaged the house again, managed to get like another, 200 grand or something out of that. So we were at this point, mortgaged up to the eyeballs and all in at this point, like all chips on. And this is the tilt. And if we lost, we were going to lose everything. But it was like, well, I don't think I even thought twice about it.
Wow.
It's like, okay, well, let's do it. And which I guess is, yes, the bonus of working with your partner is that, conversations like that probably go a lot easier. Do we want to risk the entire family on this? Yes, let's go. And so, yeah, and so I had to start down this sort of fast growth journey, and it was working. But meanwhile, I'm trying to do this capital raise and not knowing whether we're actually going to run out of money before we can get the raise done. And there were numerous times where during that, because it took, I think, 14 months to get that raise done, and we thought we were going to run out of money a lot of times.
So tell us about the raise.
So we actually decided to take strategic money. So we sold 25% to Woolworths, which made a lot of sense because they were able to put not just money into the business, but also, they were the biggest online retailer in the country, and they had a lot of expertise that we thought would be very useful, and it was. They had employed all kinds of super smart people that we couldn't afford, but they would let us talk to them for free, and so, and they had a database of 8.5 million people that they were going to, let us talk to, and we thought, well, that makes a lot of sense in terms of what's going to be the option to get the business where we want it to be.
But at the time, Woolies did not. They've got W23 now.
Yeah, they didn't have that.
Most big corporates, well, not most, but a lot of big corporates now. CVC, corporate venture capital, is now a thing.
Yeah.
But back then it wasn't.
No. So it was kind of a shock to
everybody.
everybody.
Who were you dealing with? And did they know what they were doing?
They did. They did, but I think the challenge was that a lot of the structures and things weren't there, and so for them to do a venture deal was as much paperwork and palaver as it was to do $1 billion acquisition. And for us, the size of their investment, it was chump change for them. So, so it just took longer. That's all. And then I think the challenge is that a lot of the extra value that we were supposed to get ended up not eventuating, and then it just kind of didn't really make sense for us to be there.
That's when people ask me about corporate or strategic deals.
You take strategic deals, there's
really challenging.
There's strings.
Yeah, because a big corporate is not really designed to take a minority stake. The whole thing about venture is you back the founder.
Correct.
So when you're a corporate, it's like, well, you work for me.
Well, look, they were actually great. I really enjoyed. There was nothing bad about the experience. It was just that the strategic alignment disappeared after a while, and so then it didn't make any sense anymore.
And so I think when we talked, you'd done that deal, and
Yes.
it was accelerating, and then but the year after you bought it back.
Bought it
so you
back.
basically, so talk me through that.
Probably can't talk a lot about that
Right.
process.
What
But
about
yeah.
the thinking? Can you talk about the thinking?
Yeah, well, it was just it was strategic deals kind of cut off all of your other options, and for us, it just didn't really, the alignment wasn't there. The CEO who had been sort of owning that strategy left. Every single other person at the company in a direct line to our business left. And so then it just didn't, we were just kind of floating there in this $60 billion company, and it just didn't make any sense anymore.
Right.
So we just went, all right, I think we need to go.
All right, and let's fast forward to last year.
Yep.
You sold 60% to Quadrant, which is the private equity firm. So again, do you want to touch on that and the thinking and how that worked?
Look, I think what our experience definitely was through, I mean, we were, had 2 years with Woolworths as a shareholder, and what our experience was is that really did take the business to the next level. I mean, we tripled the size of the business in that 2 years. And so having that governance, having that oversight, having the capital into the business, but if you make the right partnership, it really, puts a rocket ship under it. And I think we still had a lot of ambition for the business and wanted to really see what it could do, but we still own the whole thing at this point, and I think it starts to get heavy, like doing it all by yourself, and the numbers get bigger and bigger and scarier. And we thought, look, again, it's that, what is the best option to make the most out of this business and to give it all of its opportunities? And we thought, look, I think if we find a partnership and it's the right partner that's aligned with us and where we want to go, then I actually think that will be the best option. So that took probably a year.
Okay.
And so we didn't go into it lightly, and I did an absolutely massive amount of due diligence on them as private equity partners. I reckon I spoke to maybe 13 or 14 different founders that they'd worked with over the years, just to try and suss out what their style was.
Did you know at that point that you'd be planning for an IPO the year after?
No.
Right.
I mean, that was the plan.
Right.
Eventually, we probably didn't expect it to be quite so soon.
Yeah.
But that was definitely where we wanted to go. So we thought it might take maybe 2 or 3 years, because we'd sort of sketched out, okay, well, how big does the business need to be, and what does it need to look like, and what do the metrics need to be? And then we just got there quicker than we thought. Yeah.
So they came in, there was loads of money, it accelerated the growth, and your metrics looked good enough at the start of this year that you thought, now's the time?
Pretty much.
Right.
Yeah.
And did COVID help? Did the numbers accelerate as a result of that?
Oh, well, it did. I mean, for e-commerce, it's like, because it was this channel shift that's been happening. I mean, we've seen it happen for 20 years, right? And it's, it was very, very slow at first, and picking up speed, and and then COVID happens, and all of a sudden just accelerates the whole thing by, probably 8. I mean, it had pushed us forward about 18 months in our projections in terms of where we were going to get to. And I think it was just that point that everybody realised, okay, e-commerce, like, it's going to be a thing, and Australia's been a long way behind everywhere else. It's been behind the US and the UK, by a few years. And if you look at China, like, China now for e-commerce penetration in beauty is pushing 50%.
Wow.
And that's where China, and where Australia is now was where China was 6 years ago.
Right.
And so then it's like, okay, well, everybody can see where this is going. I think finally everybody actually gets it. Yeah.
Yeah, I think the UK non-grocery sales are now at 40% of all retail.
Yeah.
Do you know the number for here? Is it
12.
20? 12.
12.
Holy crap.
Yeah.
It's not very good.
Yeah. Oh, look, but it's, but it went up, like, it was at like 8 and it went to 12, like, in a few months.
Yeah, the UK, I saw the chart for the UK number, it kind of ticked along at 30%.
Yeah.
Jumped up to 50 plus.
Yeah.
And now it's come back to 40. So, but basically, you've accelerated 2 years and 6 months.
100%. Yeah.
That's amazing. But any other thoughts on e-commerce? I mean, there might be budding e-commerce entrepreneurs listening or here in the room. Any tips for them?
Well, I mean, the thing fundamentally, and this is not just e-commerce, but think with any business, is that think about your customer first and think about how you're going to add value to them and why do they need you. And it's not enough to just go, okay, great, well, I'm going to, start a business and I'm going to IPO it and I'm going to sell crap on the internet. Like that's not, you've got to start with the customer first.
Yeah.
And you build your business. You build your business from there, and it's the same with e-commerce as with anything. It doesn't, just selling things on the internet doesn't create a compelling business that lasts.
Because, I mean, like to build a business like yours, I mean, there's multiple facets to you. You've got the technology that we touched on. You've got, social.
It's all of the brand partnerships. I mean, that's actually been one of the really key things for us to build up, because in beauty there's very strong brand affinity.
How long did it take to get Estee Lauder on your
14
site?
years.
14 years.
14 years.
And did they ask you in the end, or are you still asking them?
Oh, I actually can't remember. I think they finally turned around and went, hey, that thing that you've been nagging us about it for ages, to the point where we got really irritated with you and kind of told you to nick off. Well, actually, we've decided we want to do that now. So, okay, cool, let's go.
Was that satisfying? Was that the same person you were hassling that whole time?
I actually, yes, it was. But I don't know. I don't take glee from it. It's just like, okay, well, great.
Yeah.
Let's do it.
Touch a bit more about the business. So, I mean, you are strong in the social media. I think you said once that, customers like having a face to the business, which I think is true.
Sure, yeah.
So are you more active in social than many other founders out there, you think?
No, look, the business hasn't, the business's social presence hasn't actually really been built around me, and is, we need more diversity of faces than that anyway, and that's something that's actually really important to us, something we've been working on quite intensively for the last couple of years in particular, so it's important that we have lots of different faces, but I think the thing that's been cool for us is to see that evolution of how customers think about beauty online, because there was sort of early on, like in the strawberry net days, it was kind of all about price, and then it became about convenience, and that worked well for us. And then what we're seeing now is that customers are willing to actually discover products online and buy things that perhaps they've never tried before, and so for us that's where things have gotten really fun, and things like our YouTube channels. We launched our YouTube channel in the middle of lockdown, which presented extra challenges for continually producing content now that we couldn't get into a studio or actually get anybody together, but we kind of made that work, and that's been really successful. We have the #1 fashion and beauty podcast in the country, Beauty IQ Uncensored, which is coming up to 2 million downloads. We launched that about a year ago.
Right. Are you the host?
Me? No. Oh. No. So yes, it's actually not all about me, which which is good.
Look, I want to jump to questions in a sec from the crowd, but women in tech. I think Josh mentioned this. I mean, like, you are incredibly unusual because you've got majority women management team and majority women board, and I think you've talked about that as being a source of pride, which I agree with. But I mean, do you want to touch on that and how you think about this?
Yeah, look, pride, but also kind of horror to work out, as we sort of started the IPO process and, started looking at our sort of comm strategy and all that sort of thing. And I said, okay, well, where are the other, like, who are we joining? Where are the other, like, women founded businesses that are on the ASX? And there's not many. Like, there's smaller ones. And there's some where, like, Wise Tech has a female co-founder that is not very visible, but we sort of at one point went, are we actually like the biggest with a female founder and a female CEO? Like, that can't be right. It can't be right. Like, there's what is it, Josh? Over 2,200 companies on the ASX. Like, why aren't there stacks? Why are there only? There's 5 companies out of those 2,200. There were 5 before us that had a majority female board. Wow. Like, how is that a thing? Why is there not lots? We kind of, equity markets are supposed to be kind of, this paragon, this gold standard of, these are the best companies that Australia has to offer, and that's what they're offering to the public investors. But why are there no women here? Or so few?
Yeah.
Like it doesn't, So yes, it's great to get one more, but and I remember saying at the time, like, I don't want this to be a record that sort of stands for the next, 5 years. Like, I want someone to come and smash this next month. This is just, there ought to be lots. And, no, I never did dream of an IPO when I was in my garage, but why didn't I? Why aren't we putting that in women founders' heads, that's where you can aim, and to think that big? There just needs to be more of it.
Yeah, here. I mean, like, you often hear the expression, you can't be what you can't see. So I think.
Well, you can, but.
No, it's harder.
But it's harder.
Yeah. And I think just before we move to questions, like Katrina Wallace, we chatted to her, it was like 2 or 3 years ago in one of these chats. And so she listed Flamingo, and she had a female chairman. She's saying part of the roadshow is she went to all these banks and insurance companies, or not insurance, but the brokers. Yeah. And the two of them were in a room, and the suits, all these blokes came in, and I think one of them almost asked them for a cup of tea, and the other ones are like, "You're in the wrong room, ladies." So that was a horrible story. And then the other one was like, she had a nose piercing, and as part of one of the documentation, they said, "You got to remove the nose piercing," and she said, "That is the most ridiculous thing I've ever heard. Why don't you go and get stuffed?" So there's still some ingrained problems that I think we have to solve as a group. So.
For sure. I mean, when we were presenting to fund managers, I would say 90% would have been men, maybe more.
Yeah, and there's a challenge in venture as well. Michelle Deaker and my other half, Andrea, they're the only two women that founded a VC company. So it's hard. Anyway, should we jump to some questions and maybe take it? So it is in Slido, so you can put your questions in there and then vote it up. Why don't we take this top one? Catherine, what skills do you think have been the most valuable for your career so far?
Gosh, I did get really good at pitching.
Oh, yeah.
Which, yes, by the time you come to do a couple of IPO roadshows and you're doing 12 Zoom calls a day for like a week, just back to back.
It's been so efficient.
Everybody said that. They said, "Oh, this is great. You don't have to go and do the travel." I'm like, yeah, it's pretty intense though. Start your Zoom calls at 7 a.m. through to 11 o'clock at night. But look, yes, I did learn to get good at, talking about the business and being able to communicate that and being able to problem solve, I guess, people's concerns or reservations about the business, because that's what I did with brands for such a long time, was to, explain that actually e-commerce is the future, and yes, this is an appropriate place for premium beauty.
And just on the pitching skill set, because that's probably a lesson that we can all take. I mean, what is it? Is it about storytelling? Like, how did you become so good at it, or better?
It is about storytelling. I think it's actually about letting people see your passion and see what you care about. I think there is, for women anyway, being authentic and also being willing to listen and reflect is really useful. Being able to demonstrate why you care about this so much. Yeah. I think people respond to that.
Yeah. All right, let's take another one. Actually, there's one I was going to ask you, but someone else has done it for me, so that's great. Mm-hmm. So on the cultural, awesome story. Thank you, Kate. How did your team culture change with each major change of structure ownership, and how hard was it to nurse the team through those shifts?
I guess I approached all of those shifts with the point of view, and IPO included, was that the most important thing that we had to protect was our culture. That's why I did so much DD on Quadrant. Was, Woolies was only ever minority shareholder anyway, so they weren't, nobody really saw them. And with Quadrant, I I made sure that they were not, that we were not going to partner with the sort of PEs that would come in and try and make us start doing things differently or make our decisions differently.
The looting and pillaging you don't want.
Yeah, no, the looting and pillaging was right out, and so, and I think we did that successfully. And for me, actually, IPO, our culture was one of the reasons that I wanted to do it, because it's about setting up something that lasts. Because I think what we've created is something that is genuinely special, and it needs to be protected.
Yeah.
And obviously, you make any partnership with private equity, then there's going to be another transaction at some point in the future. And I couldn't bear for it to be a trade sale and watch someone else come in and ruin it. It needs to go on.
Yeah. And just on the team, I mean, like you've handed the reins as CEO to someone else. So again, tell us about that thinking and who you've got.
Well, I actually hadn't been CEO for a couple of years. So James and I had been sort of joint CEOs until we realised that was actually making everybody's lives really difficult and slowing down decision making. And so we decided, okay, that didn't make a lot of sense. And my role was always more externally facing. So we said, okay, right. So yeah, a couple of years ago, so he was the CEO.
Yep.
But he'd always said, look, this is not, like, as the company grows, I think we both realised that we're startup people, and at a certain point, the company needs more than that. And we thought, well, the company, I think, will benefit if we can find the right person and bring them in. So we started looking, about a year ago, I guess. Took us a while.
Yeah.
Find the right person. Couldn't be a retailer. I didn't want someone to bring kind of old ways of thinking. Definitely wasn't going to be a beauty person. And so it needed to be someone who was an agile thinker, a big thinker, a strategic thinker, but also someone who was aligned with our values and aligned with our culture and the way of doing things. And Tennille is an absolute gun. We feel so lucky, honestly. She's amazing.
All right, that's a good story. Love it. All right, Billy Tucker. Thank you, Billy. A huge upside associated with a listing. But there's some downside potentially too. So you got volatility, you got the disclosure. I mean, you often hear about the amount of time that compliance can take. Mm-hmm. Again, if you're not the CEO, you probably don't have to worry about it as much. Did you think about the downside impact of an IPO?
Yeah, always. Yeah, of course. And we recognise that there's, it's a package, and lots of things that it comes with are great, and lots of things that it comes with are a bit of a time suck or seem like that at the time. And, and there is, there's obviously, it's very heavily regulated. I think, one of our core company values is always that, doing the right thing. And so we felt, okay, well, that's okay. It's not like it's not a values aligned thing. And we can do that. Like, we'll get the right help in, and we'll make sure that we can navigate all of that in terms of the disclosure and all of that sort of thing. And we've got an amazing board. The market volatility, I actually don't think too much about, to be honest, because it's just, well, we've been building this for 20 years. We're going to go on and build it for another 20 years. Whatever the market does from week to week, it's like, okay, you can't get hung up on that, because that's where you get to sort of short-term thinking and you make bad decisions. And so I actually don't check the share price.
Yeah.
I don't look.
I'll ask this question from Mata, because he probably knows something that I don't. So tell us about your side hustle.
My side hustle? Oh, which side hustle? So I also have a software business. It's a SaaS business. It's called Foundation.
Foundation?
Yes.
Okay.
So my brother is the CTO of UpBank. And we kind of built this together, on nights and weekends. And it's a SaaS business that helps beauty retailers assist their customers to find their right shade of foundation and concealer. So it's quite a niche problem, I guess, but a problem that I had a lot of affinity with, because we were always trying to solve it for Adore Beauty. How do people choose their foundation shade online? So we built a thing that solves it, and it's now being used on a whole bunch of global retailers, including, Adore obviously, but Sephora, Mecca, Macy's, Laura Mercier, Charlotte Tilbury, Bare Minerals, So it's,
Cool. Rob Fitzpatrick, 6 years behind China in e-commerce. We're only at 12%. So, how hard is it to get that cut through to the consumers? And how are you going to continue to build that share as it gets more competitive? Because I think I read you're doing TV advertising and some other things now.
We did start that this year, yeah. I think as a bootstrap company, it was always kind of challenging to think about investing in brand building because it was never something that you could see a direct, return on ad spend in the limited kind of time frame that we needed to be able to make the investment back. So it's actually been great to start doing those things, and obviously a lot of the way that we build brand is around our content. So podcast, YouTube, all of that kind of stuff, and social. But yeah, there's still more to do, and we see that as one of the biggest kind of upside opportunities for us is that our brand awareness is still actually about half of our omni-channel competitors. But we know that once customers discover us, they absolutely love us, and they say pretty much welded onto our platform because we can track cohort behaviour over so many years, which is the benefit of having all this data is that we can see how people behave, and so we know that if we can actually just help more customers to discover us, then we can make lots more people happy.
No, I definitely feel. I mean, there's so much of a tailwind in this e-commerce business. I think there's a huge upside.
Yeah.
It's unbelievable. I mean, I didn't realise it was as low as 12%.
Oh yeah, there's a ways to go. Yeah.
All right, let's take another question. Anonymous, what is one really tough situation you had to encounter in building your business where you felt stuck? I'm thinking of the period in 2010, but I'm sure there's others, so maybe a different one. How did you get past it?
Look, I mean, these sorts of things, they happen all the time, all the time.
Every day, isn't it?
Every day. Gosh, people are like, oh, did you ever have a moment where you wanted to give up? I'm like, oh, what, like today or yesterday? So let me think. Look, I think one of the challenges which I think it comes for every company that's growing and you have to deal with it at some point, was, sorting out our culture and values. And for us, it was the year that I think we went from 12 employees to 25 employees, and so suddenly it was bigger than just kind of a family all in the same room. And we had a couple of personality clashes in there, which were actually more representative of sort of values misalignment, and the whole company actually became a really toxic place to work for about 6 months. And there was a Fair Work case, and it was just like, it was horrendous. I'm talking like 12 years ago.
Okay.
And after all of that, we sort of, with all of the remaining people in the company, kind of looked at the fallout and just went, this is never happening again. How do we make sure that this doesn't happen again? And so we went through that process as a team of working through, when things are great here, why are they great? What are the key sort of decision-making values that are at play here? And we spent a few sessions working on this as a team to come up kind of with a distilled list of company values, and we have stuck to those, and we have used them for every single hiring decision, which is sometimes really difficult, particularly when you're talking about, very highly skilled technical positions, because sometimes it's hard enough to find the people with the skills, and then if they're not values aligned, it's like, I'm sorry, you can't work here because we know how much of a mess it makes. Yeah. And that's not the sort of company that we want to build. And so, but then having those to use kind of as our North Star for, it's such a useful tool for everybody in the company to make decisions. And I think it's kept us together during COVID because everybody is still very clear on, how do we want people to make decisions and what standards of behaviour do we accept? And that's been an incredibly important piece of work that has helped us to scale to where we are without all the wheels falling off.
No, when I look at all the high growth companies I've talked to, one of the common features is just this rigorous articulation and discipline of the company values.
Yeah.
So if you don't have it,
if you don't have it, it's not, it doesn't work.
That's a great story.
Yeah.
Let me ask this from Julia. What was your strategy to get customers early on? How important was marketing, and how loyal are your customers?
Oh, early on. Well, look, it's a very different landscape. There was no social media 20 years ago, so it's very, very different. So it was pretty much trying to build word of mouth like in the old-fashioned way. I mean, that was actually where, you know, like it's, I don't know, are there any Adore customers here? There's a few. So you guys know about the Tim Tam.
Every female hand, I should say, yeah.
And some male ones too. We're very inclusive. So you guys know about the Tim Tam. So we include a Tim Tam in every order, and that's kind of how that actually started, was that how can I make people so excited to receive their order that they might tell one other person or tell the person that sits next to them in the office or something. We used to even put like little referral cards in the order saying, hey, you know, if you'd like this, like please give one to your friend. Right. And yes, but except back then it wasn't a Tim Tam, it was a furry friend. Yeah. Do you guys remember furry friends? It was they had like little Australian animals on them. And yeah, it was just basically to try and put enough sort of, you know, surprise and delight in the orders that people would be so happy that they might tell somebody. Yeah.
That's great. All right, let's follow-up question on the VC female question from Anonymous. So, hi Kate, do you think the VC community has levels of unconscious bias that are contributing to there being less female IPO, CEO or founders?
Yes.
Right. How do we fix that? There's probably a better way of fixing it.
Look, there's a number of things that need to be fixed. And I would say actually VC in Australia is not anywhere near as bad as it is in other countries. Like from what I hear about the US, it's like people, at least I think most of the, you know, the bigger or more well-known VCs here are actually like are actively working on this problem and are trying, which is kind of the first step, right? Is to actually like start measuring it and holding yourself accountable to it is a really good first step, because that's how, you know, you start changing behaviours. What I will say is that the higher up you go in the sort of the funding journey, so VC is, I think, pretty good. Private equity is pretty bad. Like fund managers, or when you're getting to IPO level, is even worse. Right. So, and when I say worse, I just mean more male-centric and less aware of the fact that that brings bias with it, and that probably actually you might not always be making great decisions because you don't have diverse decision-making. And look, obviously diversity is on many, many, many more levels than just, you know, men and women. There's a whole, I mean, yes, but this is, you know, this is a place to start. Yeah. How do you fix it? I mean, I think measuring it is a really good place to start, and looking at it. And I think, I mean, there's a whole bunch of things that we need to be doing for women founders to even get them to that stage. And I speak to a lot that, you know, that really struggle to even sort of get to VC stage because they don't have the right networks, they don't know the right people to even be able to raise an angel round. And also too, I think also the VC community tends to look at, you know, purely tech businesses, and businesses like mine that, you know, involve an actual product and having to ship a thing in a box. Ooh, gives a lot of VCs the heebie-jeebies, because oh no, I only like software and all I want is a business that can be like $1 billion. You know, if you're not going to be the next Canva, I'm not interested. So I think, and a lot of the businesses that women start are solving problems that they've experienced themselves, and so there's a lot of consumer-led businesses. And there's nothing wrong with that, but there's nobody catering to that segment, I don't think.
All right, we're galloping towards 9 o'clock, so let's try and squeeze a few more in. Sam, at what stage of the journey did you offer incentives to staff, like an ESOP? Any key learnings from that?
When did we do that? It was after Woolies.
Okay.
Yeah.
They must have been happy when you IPO'd successfully?
Yes, I think so.
Yeah.
Yeah, well, I certainly hope so. Yeah, look, it's not easy. It's actually quite difficult to do it. And the other thing that I would say is that it's not actually a key motivator for everybody.
Right.
So I guess you've got to decide, okay, why are you doing it and what are you hoping to achieve from it, and then think about structuring your program in that way. Because actually money just doesn't motivate everybody.
Yeah.
Yeah.
I think it's, so hearing Aussies that come back from the Valley, and you know, there's increasing numbers, especially now, apparently there's 400,000 Aussies have come home from overseas this year. they were always surprised when they were going for a job in Australia that the lack of, especially in the startup sector, the lack of where's my equity questioning going on. But I think that's changing, because the reality is you're seeing companies like you or Atlassian or any of the companies that have actually successfully had founding team staff members have success. And the secondary share market now is kicking off. So ESOPs have value in a way they didn't used to.
Look, and to me, that's actually been one of the more exciting things about our IPO was that we were able to extend that to the entire team. So every single person working at our company got shares, into the IPO. And to me, that's really cool. But it's actually really hard to do that outside of a listed company. It's just not easy, like legally.
All right, still a few questions here. So why don't we sort of go a bit more rapid fire?
Sure.
Josh McKinnon, can you talk about some operational decisions that have had the biggest impact on Adore's growth? New warehouse.
New warehouse, yes. It's actually all just kind of like boring things, like investing in software at the right times. We've been transitioning onto a headless commerce architecture for the last kind of 18 months or so. It's still a work in progress, but I think that really sets us up into the future that we have sort of very nimble building blocks, and we're not going to be welded to a monolithic platform. And so if we need to adapt or do things in a different way, it's actually then just becomes much easier to switch things out and switch things in. So, and those things are, like doing those things is hard. Like we're kind of the first e-commerce company in Australia to have a crack at it. And it's hard. It's hard being the first one because it's like there's nobody else that can tell you how to do it. So
is it fair to say that, like, especially at the scale you're at, but iterative improvements are better than big bang improvements?
They're certainly less risky, yes. Right. So in that sense, they're better. Yes, yes. Re-platforms are the worst.
Wouldn't recommend it.
It's the worst.
All right, let's keep going. Pearl, they say building a great company is all about having a great team. How do you identify the best people to build Adore with, or the right people? It's that values. The values alignment is really important, but also I think, because our company is growing so quickly, it's changing so quickly, and you have to identify. We call them swimmers, so people who you can throw in the deep end, and they will figure it out. Because sometimes we're trying to do things that nobody's done, and some people are more comfortable with that than others. And I think millennials, for instance, tend to get a bad rap because it's like, they're always wanting career progression or whatever. It's like, well, that's great. Like your job is actually already not the same as it was 6 months ago because I need you to be doing something else now. And people who are adaptable and thrive off those opportunities, I think, do well at Adore. Yeah. All right, Paul Migliorini. Hey, Paul. As your business has evolved and generated new insights, have your values evolved with them? It's an interesting one.
No, I think the values are the North Star, because the values are how do you make decisions based on new information. Yeah. So those stay constant.
Yeah. Yeah. Maybe the last question then. So what extent is from Hugh Evans, what extent are you a tech company versus a beauty company?
I don't think we're a tech company in like sort of the traditional sense of a tech company. I think obviously we are tech enabled to a depth that most retailers are not. But we would still consider ourselves, a retailer and particularly a beauty retailer fundamentally, I would think.
All right, look, I think we'll call it there just to make sure that we're finished in time. So
sure, lots of questions.
Loads of questions. So I appreciate everyone here and online asking them. So let's give a round of applause to Kate. All right, look, that's it for this morning. Final thank you from me to Josh and the whole ASX team and the guys up at the back. Thank you for all your support. Thank you to our sponsors. Again, AWS, IAG, Pharmac Ventures, Macquarie, and KPMG. Couldn't do without them. Thanks everyone for turning up in person. It's great to see so many smiling faces. And thank you everyone for joining us online or on the podcast. We're going to be back next year. We are going to have a full schedule of podcast releases. So I'm interviewing a few people, some in the room, Meta, over the next few weeks. So we will have a full schedule of podcasts that we'll release over December and January. We haven't really finalized our year for next year, but we are going to be back. I think the sky is clearing, so we'll be back for more next year. So thanks again for coming. And Kate, thank you. That was great. Really enjoyed that.
Pleasure. Thanks, everyone.
All right. I think we can hang on. Are we allowed to network? All right. Thank you. All right.
Super.
Let's do it.